Right, we want to drill deeper now to a discussion this morning, streamlining the sacco sector, and of course, making sure that also we are giving that impetus to the saving culture in Kenya. We know that the Kenya government identified cooperative movement at independence as the best vehicle for addressing poverty among majority of Kenyans. The movement was key in assisting the poor to pool their resources to enable them purchase land, engage in business and acquire assets in order to indigenize the economy, which was dominated by foreigners. At independence, most of the cooperative organizations were agricultural based. The saving and credit cooperatives started as merry-go-rounds after independence and became fully fledged saccos in the 1970s. Among the workers, it was very popular. Now, the sacco became very popular with salaried employees also who were not able to access bank loans due to lack of collateral. This informed the fast growth of sacco, or the saccos, I should say. The sacco movement in Kenya is billed, I should say as well, as the largest in Africa and among the top 10 globally. We want to talk about that with the panelists who are here this morning, and if you caught us at the top of the hour, I'd introduced some of them, but now we have a full panel and we want to drill deeper onto this particular discussion. We have with us Mary Mungai. She's a commissioner for cooperative development. Also, we do have with us as well Alphonse Kaio. He's the CEO of Mwalimu National Sacco. We have with us as well Daniel Opondo, who is a society manager, Nation Staff Consumer Cooperative Society, that is NASCOs. Also, we have with us Samuel Maina, as the chairman of Urithi Housing Cooperative Society, and we have also the CEO of SASRA, is James Mwaka. Good morning, gentlemen.
Good morning.
And lady. I was looking at Mary. She was just about to bash me on that as well. Yeah, but it was a wait for it moment. Thank you very much for joining us this morning. And of course, we want just to drill deeper today and discuss the vibrancy of the saccos in Kenya, which has, I've mentioned before, it has been billed as the best in Africa. And looking at the exponential growth that we've also experienced so far, we want to learn about the challenges. We want to learn about also some of the successes that we can hail as good so far, and what are the learning points that we can actually take forth moving forward. Let's just begin with the background, because at the top of the hour, I just mentioned that, Mary, we were celebrating the International Cooperative Day, and you actually told us about the theme, right? But what were the learning points from that particular day? In regard to, looking back, they always say if we have a proper strategy, we should always, retreat, recoup, then relaunch as well. Looking back, what are we learning? Where are we headed? What is the trajectory?
Thank you very much for this chance and for inviting us to talk about the cooperative movement, which, as you say, is very key.
Yes.
And I just wanted to make a little correction that actually the sacco model, or the sacco model, started with the agricultural marketing cooperatives, which were very, very successful.
Okay.
And because of the payment to members, they decided now to start savings in those agricultural marketing cooperatives. And that's how it came to being, and as vibrant as it is. Going back to your question,
yes,
on Ushirika Day, it was really a very important day for us as part of the world, because that was the day every country that has cooperative movement was celebrating that particular day.
Yes.
And for us, it was very good because we looked at what we have achieved. And I can tell you, if you came on that day, we had exhibitions and they were all fully booked, and we saw a lot of things that the cooperative movement have done, which actually is not out there in the domain. We saw quite a number of SACCOs, savings and credit cooperatives,
yes,
telling us the membership, telling us what they have, and telling us their coverage. The other one that we saw was the housing one, showing the world, or showing the members that were present that day, on what they have been able to achieve towards housing. And I want to say that even a World Bank report that was recently shared says that the cooperative movement, especially the housing cooperative, contribute to 80% of affordable housing. The other one, of course, was coffee. There is a group of coffee which was showing beyond bulking and primary processing, they are now actually roasting and selling cups of tea of Kenyan quality. So we saw a lot of things, but most of all is that the cooperative movement was there to talk about their principles and to assure their members that we are going and we should always mainstream the cooperative principles in our business model. So it was a very good day that day.
All right, so how can we uncouple the cooperative's principles to what we normally call the ethical leadership when it comes to, you know, some of the principles that also are codified to some of these codes that we know, like maybe King 4 codes or the Mongozo codes. I don't know if it's that part of the domain that you can actually tell us. Are these principles in any way borrowed heavily from these sort of codes that we do, or where do you draw your principles from?
Actually, they are borrowed, or rather they are mainstreamed in the cooperative principles and cooperative values and ethics. Because among the things that it's so important for a cooperative to be vibrant, for members to have confidence, we are talking about honesty of leadership in the cooperative movement. We are talking about integrity. We are talking about inclusivity. We want to work with one another, and that's why we say cooperative business model is so critical because of the inclusive nature. The model thinks about the community. It has a bigger agenda, not just profit making. We are thinking about social aspect. We are thinking about sustainability. We are thinking about information. So it has a bigger, the principles are mainstreamed.
They're mainstreamed. Thank you. Let's just hear from also Alphonse, as I mentioned. Your sacco has also been billed as one of the largest sacco in the country. We want to also learn about some of these principles that are being alluded here by Mary. What are these principles? Because we want to drill deeper and try and discuss. We have other SACCOs which we know have been deregistered, and some of them have gone really down the tubes. But how have you been holding the fort for all this time?
Thank you once again for giving me this opportunity also to respond to your questions. And also to the country about the SACCOs. Dwelling on Mwalimu, I will say that the biggest SACCO in the country and also in Africa. But what has really made Mwalimu to be where it is the issue of governance, because as a SACCO, the issue of governance is very critical. And also the SACCO is run in a democratic manner. And when we are talking about the principles which are guiding, the cooperative Kenya, as it has mentioned by the Commission, is that we have embraced in the, in Mwalimu SACCO. And that, of course, has given members, the confidence that, their resources which they are putting in the SACCO, they are safe and they're secure. And also we ensure that there is equity in terms of accessing, services by the members. We don't have a situation where you find some members are given preferential treatment. They are all treated, equally. The other aspect is, of course, we also embark on the side, because when you look at the SACCOs model, it has an aspect of the social aspect and also economic aspect. But the driving force of SACCO is actually not really to make, profit, but first of all to impact on the members of that SACCO. And again, also, we do a lot of education to our members to create awareness about the SACCOs, the benefit they stand to gain. And that has made members, embrace the culture of savings and be part of, the movement in the SACCO. And that also contributed so much in terms of the growth which has made Mwalimu to be where it is. And we still continue because, again, the opportunities are there for growth. The other thing I also want to mention is that as we also embrace these principles, of course, we are also guided by the Minister Commissioner's Office and also the regulator, SASRA. Of course, we monitor what we are doing to ensure that, we're in compliant. And the key is integrity is very critical. Integrity is very critical, and this we have to actually drill deeper, as I've mentioned also before, regarding some of the cooperative principles. But we want to see the dichotomy between FOSA and BOSA, because this is pretty confusing for many Kenyans right now. We have this advent of FOSA, the front office, and some of the SACCOs are still operating on the BOSA. And I think Mwalimu, you're operating on the FOSA. And so he's also NASCOs as well, operating from FOSA, Mr. Opondo, right? Yeah, you can tell us more about it. So,
and more as a consumer.
And more as a consumer. Just for the benefit of our viewers, and of course, we know this is an advent of technology, and we have to keep up with technology. What is a FOSA and what is a BOSA?
Yeah, generally the FOSAs are those SACCOs which deposit are taking. And regulated by SASRA. And then the BOSAs on the other side, just like the consumers, try to offer to members from their pooled resources socio-economic services within the immediate society, within the immediate community. Yes, at price subsidies, also enabling members to own shares. Yes. At the end of each year, like any other sacco or cooperative, of course, members earn dividends. And also it's a good thing that we are creating employment. Yeah, we are developing employees. Yes, and we are part of that 2030 dream and of this government to continue creating the jobs that we keep hearing about.
The 2030 vision.
Yeah,
Vision 2030. Vision. All right, thank you. Thank you. Let's just hear from Mr. Maina, because I think also Urithi is operating on Bosa. And you tell us why Urithi is operating on Bosa. Well, and what is Bosa?
I think Mr. Mwaka, the CEO, will stand a better chance to expound on that, but I can quickly point out. I can quickly point out that there need to be clarity of the definition of a sacco society versus other cooperative societies. Sometimes we use these terms interchangeably, that every cooperative society in our country is a sacco. So a sacco is saving society that primarily deals with savings and credit. And it is a cooperative, but not all cooperatives are saccos. And under sacco we have the front office and the back office. Front office is the FOSA, which is regulated by SASRA and has to meet certain threshold and certain benchmarks for them to operate. And of course, it's more regulated to cushion the public from losing their money, because under SASRA, which Mr. Mwaka represents, they are able to make sure that the deposit-taking circles, which operate like mini banks, operate within certain tenets of, operations. Regulating their money. And that is why, because it is the member who is vulnerable when it comes to FOSA than the sacco. When it comes to back office, it is the sacco which is more vulnerable, because they give loans 3 times of the savings. So the sacco becomes more exposed when they are operating a BOSA as opposed to FOSA, where a depositor is likely to be more vulnerable, because you can put in your money and you lose it. But the government saw the need to regulate this so that people putting in their money and a deposit taking will feel more secure and more regulated. But when it comes to the issue of regulation, again, it does not mean that others that are not under SASRA are not regulated. That is where Madam Mary comes in. And actually the bulk of it falls under the Ministry of Cooperative, which is regulated by the Department of Cooperative, which Madam Mary here ably represents, while Mr. Mwaka again represents the front office, the BOSA, which both of them are under the Ministry of Industrialization and Enterprise Department. So regulation does not mean that if you are not under SASRA, you are not regulated. It is only that you answer under a particular, line of reporting, and the other one answers to the other. So Mary here represents SACCOs that are not necessarily under SASRA, while Mr. Mwaka represents SASRA-controlled SACCOs. And that clarity needs to be there, because the minute you are seen not to be under SASRA, it is miscontrolled that you are not regulated.
You're not regulated.
Maybe Mr. Mwaka can expound on that.
And Mr. Mwaka can actually, you need to pay Mr. Maina is holding brief for you this morning very well.
Right. I really hear that he's given, he has attempted to explain really and unpack this whole thing. But I think let's have the first things first. And it's important for us just to unpack this whole thing about cooperatives and SACCOs. Because I think not many people really distinguish between a cooperative and a sacco. And what does it really mean? Because you'll see a lot of matatus moving around, they are called SACCOs. You see cooperatives in the rural areas, they are also called SACCOs. And therefore, that tends to confuse a little bit. So let's begin by first understanding what a cooperative is. All SACCOs, first and foremost, are cooperatives.
All SACCOs are cooperatives.
But not all cooperatives are SACCOs. I think we begin from there. Let me just explain.
Yes, please.
Cooperatives are of different types. There are very, very many. There are more than, I think, 10 types of cooperatives in Kenya.
Yes.
And they are in two broad categories. We have what we call financial, so to speak, financial cooperatives and non-financial cooperatives. So the financial cooperatives, you can break them again into about 3 categories, roughly. So financial cooperatives are comprised of savings and credit cooperatives that are referred to as SACCOs. Then we have housing cooperatives because they marshal money and invest on behalf of members. Then we have investment cooperatives. So those 3 broad categories of cooperatives, you can group them as financial cooperatives. Then we have non-financial cooperatives, which the commissioner will refer to as probably agricultural cooperatives, dairy cooperatives, they could be handicraft, they could be fishing cooperatives, or even livestock cooperatives.
Yes.
Coffee cooperatives and tea cooperatives that are involved in the marketing of these products. You see, non-financial cooperatives are involved in marketing of members' produce.
So that is purely marketing.
It's purely marketing.
No financial agenda at all.
Actually, financial agenda is taken care of now by the financial cooperatives. That would now comprise of the 3 classes I've indicated to you. That is the SACCOs, that is the housing, and that is the investment cooperatives. Now, when we narrow down to SACCOs, savings and credit cooperatives, these again we can break them into 2 categories. What we refer to as BOSA, or rather deposit-taking SACCOs and non-deposit-taking SACCOs. And I think that is a narrow definition, and I will try to explain so that then I think members of public can fully understand what this means. Now, the deposit-taking SACCOs, just for the purpose of regulation, refers to SACCOs that operate a FOSA. And what is a FOSA? A FOSA is an acronym for Front Office Savings Activity. These are SACCOs that have got banking halls, like Mwalimu National. They've got banking halls and they can take time deposits. And the people can withdraw those time deposits. Now, BOSA is what we refer to as back office savings activity. These are activities that are offered at the back office, and they comprise of non-withdrawable deposits. The non-withdrawable deposits can only be withdrawn when a member is leaving a SACCO. Therefore, these 2 categorization is important for us just to fully understand. However, it is important for the members of public to really understand and appreciate that when we talk about financial cooperatives, it's broader than savings, than SACCOs, because where my brother here is Urithi housing, they really marshal, they really collect a lot of funds and invest on behalf of members. So they are accepting also deposits to some extent. And therefore, they need also to be protected. Currently, the regulator who is regulating housing cooperatives is the commissioner. And therefore, he put it rightly that not that they are not regulated, but probably they are not regulated under prudential regulation regime, which again, these are financial standards that are adopted by financial institutions worldwide.
Thank you very much. SACCOs, saving culture in Kenya. Of course, we know this is also helping Kenyans, try and access financing when it comes to many of the endeavors that they want financed. And SACCO has become one of their favorites as well. This is what we are drilling deeper this morning with our panelists here on AM Live, and we continue apace with the conversation. And also remember, you can chime in. Hit us on Twitter. AM Live is our Twitter handle. AM Live also is our profile name on Facebook, and 20505 our SMS hotline. When we circle back, we promise to continue with Mary to just tell us also her view about the FOSA and BOSA that we are talking about this morning, and the challenges thereof as well in terms also of accessing financing so that they may try and up the ante in terms of technology. That has been a challenge for many SACCOs as well. Mary, briefly.
Thank you. Very briefly, I just wanted maybe just to recap again.
Please.
That we have over 23,000 registered cooperatives.
23,000, yes.
12,300 are registered under savings and credit cooperatives. 1,770 are housing cooperative. 450 are coffee cooperative societies. We also have cotton cooperatives. We also have handicraft. We have investment cooperatives. I wanted to give that so that we know the cooperative falls under quite a big, covers a number of sectors. The other thing that I wanted to say is that saccos, which are savings and credit, are entirely for savings and borrowing money. They are registered under the Cooperative Societies Act, that is by the Commissioner. And they start normally as BOSA, back office services activity. After they have created some level of confidence among their members, and their track record speaks for themselves, and they can be able to meet the prudential standards set, they now get a license under Sacco Societies Act. So as I said, we have 12,300 registered cooperatives. Of course, about 6,000 are the ones that are active. Out of those ones, 174 are what are licensed by under the Sacco Act. And the ones that are licensed are the ones that now are given a mandate to have what Mr. Mwaka was saying, a banking, a quasi-banking like facility.
Yes.
Members of that SACCO can channel their salary there. They can put money and withdraw. So I just wanted to make that clarification. The other clarification I wanted to, so BOSA, they all start as BOSA.
They all start
and then
they moved to
they graduate to FOSA.
Yes.
You talked about, before I move from there, you also talked about can they move on to microfinance to banks. It is a possibility. But the issue here, a SACCO is guided by principle. I mean, a cooperative is guided by the principles. It's member-based. And so when we go towards that end, it's possible that we can lose that identity. We have seen in the US, in Canada, we have very big cooperative, financial cooperatives that have still remained cooperatives. So our desire is because it serves members, it's owned by members, they are the users. We would want it to grow big, don't get me wrong, and serve the members for inclusive purposes. The other thing we talked about were financial and non-financial cooperatives. When you talk about financial cooperatives, in financial cooperatives, Mwaka gave examples. We have housing cooperatives, we have investment cooperatives, and of course, SACCO. Those financial cooperatives is where members bring money. So you bring money for saving and credit. You take money to an investment cooperative for that money to be invested, and you get returns. You take that money to a housing cooperative, and you get a house. The other ones, we have agricultural marketing, mainly trading. We have service cooperatives. We have transport cooperatives. So they do business so that they can get the returns. And of course, after they get the returns, they can now join the financial arm. So I wanted to make that clarification.
Fantastic. And of course, so we also didn't have the Cusco to really talk about their union and how they are actually helping also the SACCOs as well. Because one of the biggest challenges as people are morphing to FOSA has been financing and also the banking software. That has been a bit of a challenge. And maybe we can learn from Opondo, in terms of accessing financing so that you can actually have this banking software. And we know at least 20 million that most SACCOs cannot really afford. You can see that maybe it's not the collective amount that they have stashed away in the SACCO as well. How has been the journey for them that they want to learn from, you that have now gone to FOSA from a back office, of course, boss as we're talking?
That's to me?
Yeah, that is Opondo? Yeah, this is a question for you.
Yes. To respond to that, Mr. Debarl, it's also important for Kenyans to understand that as Mary has expounded, cooperatives exist in different formations. And the end goal of each cooperative is not only money making, Yes, that's not the end cooperative. The key principle is to improve lives collectively to the membership, and also change society.
Yes.
Immediate and nationally. For example, NASCOS is a service cooperative society, and principally we deal in hospitality.
Hospitality, okay.
Services. And in that regard, our membership enjoys price subsidies. They enjoy promptness at their disposal, for instance. Nonetheless, there's also a wing that is open to the general public, just to enable the cooperative society, that is, generate extra income for its own internal operations, and probably even external at expansion point. Yes. So I believe Kenyans should be encouraged not only to focus on cooperatives as money-making machines, but also socio-economic improvement.
Right, thank you. And of course, before we took a short break, we were actually talking off camera, and Mr. Mwaka, you're telling us about how cooperatives also, from the recent report that we had, was it from the World Bank, saying that 85% of the financing, especially that we have in building houses right now, comes from the housing cooperatives. I just want us to hear from, before we come to you, to hear from Maina, to just tell us why, you know, and of course you're saying this with this tongue fumbling chic, that you really get a lot of money, right? You really get a lot of money as a housing cooperatives, and you can tell us now what is the sole function of the housing cooperatives. I think we just got a cursory definition, but we can drill deeper now and understand fully when it comes to housing cooperatives.
The housing cooperatives are at the implementation level, because they are the people on the ground to make sure that whatever investment is there has been actualized. And probably the volumes here that we talk about, that they have a lot of money, is undeniable. But again, the work that we have is also humongous, in the sense that if you are doing construction, it's very capital intensive, and an average house will cost quite some substantial amount.
Yes.
If you look at the role of SACCOs and cooperatives in terms of meeting even the Agenda 4 of the government, the housing, there's no better way of doing this than through the cooperative movement. For the simple reason, Mwarimu, for example, cooperative, Mwarimu SACCO, has benefited so many members. Almost every teacher who goes through that SACCO will get a house by the end of the day, a plot or a house. And it spreads across the country. You'll find a teacher at every corner of the country, meaning that the management and the control and the spread, the geographical spread, is national, more than any other organization can do. And if you go to other professional cooperatives and SACCOs, again, they replicate the same. But coming to the housing cooperative, I build houses for my members who are drawn from different segments of the economy and socio-economic status. And a teacher who subscribes under Mwarimu Cooperative, and because Mwarimu SACCO may not do the actual construction, will come to Rithi and buy a house, but will be funded by the SACCO or any other SACCO, whether it's police SACCO or any other SACCO. They will get money for the purposes of financing a particular engagement. Therefore, the role of the cooperative is very well defined in terms of actualization at the cooperative level. If it is investment, you invest for to meet a certain end, either to own something or to meet your basic other basic requirement. And that is why SACCOs come in. And we say that SACCOs are savings and credit. There's an acronym for saving and credit cooperative societies. So there is a saving aspect and there is a credit aspect, because you save to borrow. You usually, it is 3 times of your savings. And therefore, when people get into SACCOs, they are introduced into a culture of putting in some money through a check-off system. Like, for example, again, the Mwarimu SACCO. Once you get employed and you subscribe to it, every month you make sure that there's some money that goes towards savings that you can later get empowered by borrowing and buying what you cannot buy first. So cooperatives embrace the 7 principles of cooperatives: open membership, democratic membership, there is members' economic participation, which is very key, economic participation of members, and that is why they cannot gravitate towards being a bank, because there is no economic participation of members, and autonomy and independence. They enjoy a degree of autonomy, independence. Education and training is another aspect of cooperative, that over and above doing whatever I do, I must bring my people. You have education day, you train them on investment, you train them on savings, you train them on other things, and cooperative among cooperatives, cooperation among cooperatives, so that Urithi and Mwalimu are not competitors, they complement. There are things that we borrow from one another. I can go to this cooperative and get a bit of synergy in terms of shared services, because if I'm not a marketing cooperative, I'll do housing, but the money might come from a marketing outfit, sacco or thereabout, and of course concern for the community. That is socio-economic aspect of it. It is more social than economic, whereas the orientation of financial institution is more economic than social. So cooperatives embraces the 7 principles of cooperative societies, which is worldwide, which is global. It is not actually a Kenyan affair. It's a global principle, 7 principles of cooperatives. And therefore, they play a very important role, so much so that the agenda, the housing agenda, for example, has been implemented more by the housing cooperative at 85% than the financial institution. Needless to say that it's only 23,000 people who qualify for mortgage for the last so many years, only 23,000 in the country. And that is the size of Mwalimu Cooperative, I think is so big.
It's a small.
Yeah? 82,000. So if you can empower Mwalimu, for example, you meet that need of what is in the financial institution 4 times. If you come to Urithi, 28,000 members. So meaning that by providing houses, I'm able to beat all the financial institutions in the country combined for the last 10 years. Meaning there's no better way of going to Agenda 4 than through the cooperative movement.
Okay, let's say from Alphonse, before we come to Mr. Mwaka, very briefly, you can weigh in on that, what he's alluded to, but I think you were one of the biggest, as I mentioned, sacco in this country. But moving to, because I think the challenge of IT is what also you saw it to be a threat that people now will actually pull up, because there's a dead hand of bureaucracy when you want to access money. And we know that when your checks need so and so to actually, I don't know, for a week, you can actually not circle back with the easy money that you want, or ready money that you want very quickly because of emergency. Of course, we know there are small, dockets like emergency fund and all. But you can tell us, in light of technology, how was it a challenge for you as well, losing members? Briefly.
Thank you for that. What I want to say, and I want to start by saying that, SACCOs have come of age. It's true that, as FOSA started way back when, 2007, there were other challenges because of the system which were deployed by the SACCOs.
Yes.
In terms of members accessing, services, it was a challenge. But then over time, and with, push from most of the regulator, SACCOs are deployed, robust, systems to ensure that they address that challenge of technology. And today we are saying that we are also looking at what, coming together as SACCOs that develop a robust, system which can be applicable across, the SACCOs to ensure that, members from any other SACCO can be able to access banking services, or if I can put it that way, from the forces at ease and at their comfort. Like if I pick the case of Mwalimu today, any member who want to access the account and make withdrawal deposit, they don't need to walk to a banking hall. They can do it at their comfort because of technology, and we are riding on technology. And then we are saying that, okay, there's still room to improve on technology to ensure that, we can even match what is happening in the commercial, banks. And I want to state that at this point for the public to know that SACCOs have systems which are serving them, and there is continuous improvement. Because as we mentioned, one of the issues which will make members save in a SACCO is the confidence they have with their SACCOs. And because, again, as has been mentioned by one of the panelists here, that we serve our own members, where we collect, we put money in a common pool, and then they borrow from there.
Yes.
And then now graduating to provide, FOSA services. Again, we are deploying, technology Today, if I pick again the case of Mwalimu, as was mentioned by the regulator here, we've come up with a robust, data center where today we are hooking other institutions for, for technology. And that is really making us have our members effectively, which we are also inviting other SACCOs. We can actually come and join together other synergy rather than individual SACCOs investing on a system, because again, as you have pointed out, it's expensive. But when we come together, it's possible to have a system which can serve all the SACCOs and ensure that their members are effectively served in time.
Thank you. Let's just drill to other issues as well. And we know what has actually, you talked about prudent student, Mary. And one of the violations has been also with some of the SACCOs as well. And we know right now the biggest scam is about the mobile money. We can see how people also are using and gaming the system to actually steal and from the public as well. Safaricom has been also on the forefront with this, saying yes, there are some culprits who actually, and they've been apprehended, some of them. But also within the SACCOs, the regulators suspended way back the CEO of Harambee Sacco and 2 other managers who it described as masterminds in defrauding the society through mobile money and ATM transfers. We wanted to see when we have all this money stashed with the SACCOs, and yet we have weaker systems that people can actually use as conduit to steal from the public, the security of it as well. What sort of remedial measures have you taken so far to make sure that this is actually taken care of?
I think it's important just to be able to be in sync with the members of public. Yes. Because today, what is the mind of many Kenyans with regard to financial institutions is a question as to how safe are our deposits with the financial institutions. How secure are these savings that we have put in this financial institution, and particularly cooperatives for that matter. And therefore, that is why effective regulation and supervision of all financial institutions really safeguard the stability of the country's financial system while protecting the deposits and savings of members. And that's why, as a regulator, we exist. Number 2, you'll find that today there is nobody who is immune from what we refer to as cyber security challenges that are facing financial institutions globally. And therefore, the idea here is to ensure that you have deployed a very robust system that is continually being improved on, being audited to ensure that any threat emanating either internally or externally, the institution itself is aware and is addressing it on a continuous basis. SACCOs actually today have just come just like any other financial institutions, and therefore they are faced with the challenge of identifying what would be the right banking software to deploy for their services. Mwalimu being the largest SACCO, for instance, and I use them as an example because they are here, is that at 40 billion, that is a middle level bank in this country, so to speak. And therefore their system cannot just be like a system of a SACCO that has about 20 members for that matter. And we need skills of staff that are there, and also the infrastructure has to be very effective to ensure that safety and security of those resources are taken care of. Now, let me give you an example of what is really happening in the financial system. Basically, is what is the minds of people is that you want comfort, because as a country the penetration of information technology is very deep in Kenya, so to speak, and we are being used as an example because of the systems that we have deployed. Where are SACCOs today? SACCOs have got some challenges in terms of identifying the most suitable system to deploy, given their level of resources. And therefore, we are encouraging them to be able sometimes to do what we call shared services. Mwalimu has a very strong and robust data system, and they've got a system that can be able to be hooked into by very many SACCOs, but you still find smaller SACCOs going to buy a very expensive system that would really not serve them as effective as if they were to now use what we call, they were to share their system, that matter. Because a shared system, again, also, you can also raise the levels of security and things like that. However, the IT uptake in SACCOs has continuously continued to grow, and we encourage them actually to continue doing that. However, they need to ensure that these systems are continuously being tested.
Right.
Yeah.
Right. But then we need to understand also when we talk about the shared services, because I think there was also an idea that was mooted way back about mergers and partnerships. Some SACCOs were not able to meet the threshold that was put for the, was it by the Capital Markets Authority? Or I'm confusing issues here, right? By the regulatory authority, not the Capital Markets Authority. Yeah. So we need to understand the mergers and partnerships. How are they actually brought to the table? And how do you decide that Mwalimu Sacco and another maybe Stima Sacco should merge? Is it because maybe they're not meeting the thresholds that are supposed to be from the regulatory authority? Mary.
Thank you very much.
And so far, you can give us an example of the mergers that we've had so far.
Okay.
And what has really informed that?
Thank you. Maybe before I come to the merger issue,
Please.
I just wanted to input on the housing cooperative and tell what the government is doing, because this is a big agenda item. As we have said, it has been proven that 85% of affordable houses come from the cooperative movement. What the ministry, in collaboration with the counties and the cooperative, the housing cooperatives, we have sat together. We have looked at issues that hinder them to get to even higher levels than they are doing right now. And we are now trying to provide an enabling environment in collaboration with State Department of Housing and other related ministries by ensuring that cooperatives get back infrastructure to their plots, because they have always complained the roads to their plots, the power, the sewer is making the housing much more expensive. So we have a sitting with them, and I think we have synthesized and compiled a report, and we have handed it to the relevant organization. The other thing is that we have found that the housing cooperatives individually might not have the financial muscle to put up or to plug into this mass housing production. So we have put them together, and I'm very happy to report that there is works in progress, and they actually have seen the need of coming together, because as a united front, they can access better funding from other areas. The other aspect that we have done is that there are legal inhibitions, barriers that they have been facing. Again, we have compiled a report on that, and I think they are being addressed, like the issue of mortgage facility was addressed and the corporate housing tax relief was addressed. So I think that is very important. The other thing that is important, because as we keep on talking, this is about employment. We are saying if for the housing cooperatives, when they start developing these housing programs that are en masse, they are going to engage, or we are going to see creation of new cooperatives, especially targeting the youth in areas of building, masoneries, welders, electricians, and we can go on. Because, as I said, cooperatives can be in any sector. The other thing that you asked, and I think it wasn't adequately addressed, was about Cusco.
Yes, Cusco.
What is their role in this?
Yes, please.
Cusco, as we all know, is an umbrella body for the SACCOs, especially the urban SACCO. And we know the SACCOs as currently, some of them, not all, as currently constituted, they face a lot of challenges, because if they have to give 3 times loans to their members, sometimes they are faced with financial challenges. And Cusco ordinarily should be, and it does, fill that gap. So it has like a pool where they can borrow. The other thing, of course, Cusco does, and that is its main mandate, is lobbying. If there are issues that are slowing their actions, they lobby, and they lobby government through us, and I think it's normally achieved. The other thing that you mentioned is the shared service.
Yes, the shared
because
service.
This is critical. We have a lot of cooperatives that have actually invested in the software to ensure that they have better services to their member, because member is continuously demanding better and effective service. They have invested a lot, but nothing has come out of that particular aspect. So what we have done as a department, we are working with CAK, the Alliance, and SASRA. We are actually saying they have especially the small ones, they have to use a shared platform. And in this shared platform, the risks, some of the risks that we are talking about, the cybercrime, because I think audit for the people with software is critical. They must always audit their system so that they can track or trace any anomaly in their transaction. The small ones might not have. And I'm still advising even the big ones to ensure that they have a fully trained auditor of ICT system, because that is an area that everybody, we want to go ICT, but those are challenges that come with it. So on the shared platform, we are foreseeing a situation where the SACCOs that will come into that will be paying like on user based. If I have 100 members who are active, I will be paying services for the 100 members. If I have 1,000, it will be the same. So there's something we are working around there, and I think it shall be done. The other thing the ministry is also doing, we are establishing the Cooperative Development Fund, which I think most of the SACCOs will get to the details. It is in law. We haven't operationalized it, but I think because of how we are going, it's critical. So
we'll get to that.
Okay.
Yeah, thank you. But we
have merger.
On the issue of merger, still you'll answer that. But still, before we go to the merger, I think on the prudence standards as well, because we have many questions that are coming from our viewers as well that we need to answer first of all before we drill deeper. We have Faith Wahinya. She's asking, being a victim of Gakuo, I would like to know the way forward to getting my money back, plus many Kenyans. And she speaks for many. There was a case of the Gakuo. Also, we have, let me try and see if I can. This is Teresa saying, Debarl Sacco is a very good platform for growth of common mwananchi, but there is so much on what is required and types of SACCs that is diluting this business, hence having those that are fraudulently operated. What does a cotton cooperative do different from a SACCO, he asks. Also, we have Alex Ayub asking, many cooperatives that were established in the post-colonial period have had their initial members dead already. However, their next of kin are still out here, not aware of any dividends or shares. So this, I think, also brings to the fore the question of the unclaimed assets. We have them in SACCOs. So how do we interface also SACCOs with the unclaimed asset financial authority, where people, they have their shares, they've died, the next of kin are not maybe alerted, or their contacts they're not, their phones are not really functional as well. So how do you also try and foster that? Do you declare the assets that they are unclaimed to the unclaimed Financial Assets Authority? I think that's a good question also from Alex Ayub as well. Let's see also, we have Jacob Abere Mtalala saying SACCOs have and still are the backbone of SMEs enterprises in Kenya. Panelists, there are these cooperatives that are online, started WhatsApp, created. My worry are, right, I cannot try. I think he's asking about this online credit facilities, the mobile ones, yeah? Maybe you can also address that. It's not really come clearly from Jacob this morning. Is there a law that states that you cannot stop a deduction of your shares once you are a member and have a guarantor of someone? These are issues that we need to address, but pertinently, especially of Faith Wahinya, he says, he continues to say, is good, you're talking about SACCOs. Now my question is about Gakuo and Ekeza SACCO. Could you maybe tell millions of Kenyans who can't withdraw and given bouncing checks?
Let me jump in just before Mary actually answers that one and talk about virtual SACCOs, online SACCOs.
Yes.
And I think yesterday there was a commentary, I think in the Nation newspaper, on the, a joint statement we have put together with other financial regulators, capital markets, central bank, SASRA, and so forth, cautioning members of public about the mushrooming of online financial institutions masquerading as SACCOs.
Yes.
We have been monitoring this, and most of them we have been shutting them down just before they can rip off many Kenyans. However, we have situations where they have already done that before we can be able to nab them and stop them from doing that. So this is to emphasize the importance of ensuring that you do a background check. When a virtual SACCO or an online financial organization starts advertising for credit, kindly ensure that you check with the relevant regulators and do a background check before you jump into it, because many of them are promising unimaginable rates of return and without really understanding the underlying risks. And some of them actually demand membership fee before you join, unlike existing cooperatives. SACCOs and the cooperative for that matter, including housing, must, as per the law, deal with the members only. We don't deal with the members of public. When a SACCO or a cooperative is dealing with non-members, it is in breach of the law, and they should be held responsible. And therefore, members of public should ensure that they participate in the processes of their cooperative. They must attend general meetings. They must demand to be provided with financial statements of that cooperative or that SACCO for that matter, so that they can be able to monitor. They must also understand who are their directors, who are their leaders, who are the committee members. Because you see, you find a member of a SACCO says, I'm a member of a SACCO ABC. They don't know the chairman, they don't know the treasurer, they don't know where the head office or where the offices are, and therefore they don't know who they are dealing with. So we need to caution members of public that they must do background checks. And the idea of opening what we normally refer to as a common bond. For instance, Nation Staff SACCO, we know their members are supposed to be employees of Nation. So immediately you open your common bond and you call yourself Media SACCO for that purpose. It means that you are inviting other members to come in. That must be reported. The commissioner actually must assent, first of all, to that. And even as you bring new other members, they must be able to understand the framework within which they are getting into, because that's where we are getting a problem. And when a SACCO is demanding 1,000 shillings for you to join, membership fee and some deposits before you participate in their products, then ask a few questions. Allow me to answer a question that Jacob asked about SMEs. SACCOs are financing small micro enterprises in this country in a very big way. Many of the small enterprises you're seeing around, actually, you can trace their financing from SACCOs. And so we are participating in a very big way in SMEs. However, it is important for you to be able to understand that as you get a deposit, or rather, a financing capital from a SACCO, you must be able to repay that amount of money. We have seen members who are guaranteed by others to take a loan from a SACCO, and once they establish a business, they stop repaying that loan, and that loan now is demanded from guarantors. And the SACCOs must now think out of the box. What would be the best and the most effective way to collect debts that are not performing, that have been guaranteed by members? Because this idea of just jumping into the guarantors immediately a member stops paying may not be the best way to deal with that challenge. If you understand that member A has gotten a loan of 1 million and has established a business somewhere using of course, your KYC, you should be able to know where that member is located. And there must be a way of even collateralizing that business, so that we improve our collection system. We are not saying that you don't follow the guarantors, because the guarantors will have to put pressure on the member to pay. But however, that should not be the only way to access that money.
All right. Maybe you can also, let's hear from what is really happening with the cooperative societies and the Mwalimu SACCOs, where we have cases, people, they are defaulting on their pay, then the guarantors are the people actually who have to actually, do their paying. We wonder, is there any amicable solution to this, sort of how we can make sure that there is due diligence, first of all, in pursuing these people who they change their numbers, maybe even change their locality, maybe even move. We've had cases, and I know victims. They go across borders, they vanish totally, and you end up saddling that responsibility of you being the guarantor, repaying that particular. I wonder from the authority what is really coming up. But you can give us experiences from the SACCOs themselves and also from the housing cooperatives.
Thank you for that, and allow me also, before I respond to your issue of the guarantorship, there's a question which was raised by somebody, Alex, talking about, circles where your parents, maybe you are members,
Yes.
they passed on, and then you wonder how do you assess the money. And I think what circles are doing today, you find they have a system where as you come in a circle, you also nominate somebody. In the event of death, who is supposed to be your beneficiaries? And once a member has passed on, of course, those who had been given a nominees will be paid that money. In case there is any dividend within the SACC, again, it should be paid to the nominees. And the most important to address that is the issue which we talked earlier on about one of the principles of cooperative is to educate members to know their rights and their obligations. Number two is also members to make sure that they also read the bylaws of their cooperative so that which would actually clearly tell them in the event of maybe a member passing on, what's likely to happen in the benefit we are in the SACC. Now, coming to your question about the issue of, guarantorship and when there is a default. One thing, again, also it borders on education because members need to be educated to know if I'm coming in to guarantee you as a member, I need to know that you are somebody who is going to service the loan. Because the moment I append my signature, I'm actually committing myself to be part of that contract. And in the event of default, then I should be able to be called upon to come and pay that loan without any complaint. But the reality of the matter is that, when you attach a guarantor defaulted loan, of course, you are passing a responsibility to this person to pay that loan. And how do we deal with that? Or what alternatives are there? Today we are the CRBs, where if you are a defaulter, you can be, listed. And therefore it means when you are listed, you can't even access credit facility from another institution. And that we have seen happening. Even in the case of Mwalimu, you find a member devoted a loan, and when he goes to another institution to look for a credit facility, he find that we are listed that person. He'll be sent back to Mwalimu to come and clear, with us before they can, consider his case. The other thing is the appraisal system. When you are giving, a loan, you need to appraise this one and ensure that you assess this person and you see has the capacity and the capability to pay. Now, there are those who may default and they want to maybe run out of the country, as you have alluded.
Yes.
And we had some cases. But the moment we write a letter to the guarantor, that letter goes to some embassy, someone will actually be denied permission even to go to another country. We had some time about, I think, 5 years ago, we had 2 cases where some members are devoted a loan and they had to go to US and they were repatriated back to Mwalimu, to Kenya, because they had an outstanding loan which they are not, paid. The other alternative, the law also provide where, you can also go for collateral as a security, which means if you are given a property as a security for your loan in the event of default, other than wait for your guarantor, we can also come and actually auction your property to recover the loan.
Right, thank you. I just need to listen to also to hear from briefly from Maina. In terms of declaring, I know Mary, she has to go, she has a board meeting, I'll let you go just briefly. But listening from, or the question about declaring some of these unclaimed assets or the shares, is it also required from, or how do you normally declare? What is the period that you shall actually declare these particular shares they've not been claimed and should be declared to the authority, that is the UFA?
Sometimes it's a bit tricky in declaring, but ordinarily what should happen is
But it's a requirement from the authority that you should declare, isn't it?
Yes. But what happens in a cooperative setup, you fill in a form called nomination form, where you give percentages of your property to beneficiaries, whether your children, your spouse, and what have you. And that one is deposited within the organization and sealed until your demise, where it can be pulled and we see how much was shared among who and who. The problem with most of our members is that first, they don't know that that requirement exists. And number two, even where it exists, people do not share information as to where they have saved and how much.
It is not their problem. It is your problem. You don't educate your members. Yes,
that's why we are saying
so that you remain with these shares, you use them to invest. So you deliberately don't actually.
But sometimes you may find that upon the demise of a member, even the organization does not know. And the member himself did not tell the beneficiaries that they are also partakers of that. So what happens is that you could have some non-performance of certain assets or finances. So I think it's incumbent for each one of us to declare as a member what you have, what interest you have in a sacco or an organization.
Right, thank you. Let me just rope in Mary, because she's about to leave. And the issue of guarantors, and we know that there's also a cooperative tribunal that you can tell us about this particular tribunal. I think from what I read earlier, it was being mooted. I don't know if it's functional. You can give us, is there any tribunal in the first place? How do you address the issues of guarantors? Or this does not really concern, or is it not within the remit of your organization?
First, maybe before I answer that, there were some questions that were asked, and I just quickly want to mention.
Please.
We are telling members of the public, cooperatives are member-based. You are not in Kitale and you want to join a cooperative in Nairobi, who will ever guarantee you? You don't know about it. So this issue, let us do due diligence. We have SACCOs or other cooperatives within our jurisdiction, where we can do due diligence using the county offices, so that we are secure in what we join. There is the issue that has been asked about Gakuyo Ekeza. I do not know Gakuyo, but I know Ekeza. Ekeza is a SACCO, and I think if there is any member that has an issue, they just write to the office and give us copies. I think that issue will be handled. But I want to tell members of the public, what are some of the telltale signs that we are seeing that a cooperative is duly registered? We have done our due diligence, but after they go, because we are all Kenyans, they change the course. If you hear any cooperative giving you abnormal promises of hyper interest dividends, be worried. If you hear, like Mwaka said, a cooperative advertising and not targeting its members, because normally even when a family member dies, we broadcast, but it concerns that family. So cooperative is a family member issue. The other thing that we want to highlight is that we have had cooperatives say, the more you save, the more chances you're likely to win. Please be wary of some of those particular aspects. Do your due diligence. So the other one that was brought, cotton cooperatives versus SACCOs. Cotton deals with marketing and bulking of cotton. SACCOs, we have already said. The other issue you have said is the issue of UFA. As a ministry, we appreciate some of those things are happening, and actually we have written circulars to the counties asking them to give us returns of cooperatives that are not performing or that are almost dormant, so that we can go there and look at what is happening, because some of these cooperatives, we want to liquidate them, because some have already cleared their mandate, have met their mandate, others have met their mandate, but because they have some few plots and members are not aware of those plots, we want to go and look at how best to advance that particular issue. On issues of members who have died and were not put as nominees, if a member in your family died and you knew they were in some given cooperative, please get a letter of administration, go to your chief, sit in your family, know who is going to represent you in that particular SACCO, and take the letters to the SACCO. I think that will help. On the issue of guarantor, I think this is, like my friends have said, it's very huge. We have seen instances where members have had to pay for members who have defaulted, knowing somebody is actually earning somewhere and you can't follow. There is that tribunal which is operational.
It is operational?
Yeah, it's operational.
Okay.
It's operational, and it will do what is required. On the issue of mergers, the law allows mergers. But we have seen that we are having, so the laws allows, and that's member driven. But again, I think we have seen there's a lot of some inefficiencies in some cooperatives. And as we said, prudential standards are required. So we are putting those standards so that the most inefficient cooperatives and has potential, they can actually be merged. Because among the cooperative principles, we say we can cooperate among cooperatives. So that's one thing that we want to advance.
Right. Briefly, just to mention very tersely before you go, and we need also to be winding up, is that the cooperative, there was a cooperative, East African Cooperative Societies Bill 2014, where we were to allow, or it envisages cross-border listing of cooperatives across the 5 EA member states. Can you tell us the development of that? Where is it at? Are you privy to it?
I'm privy to it. Of course, it was a very good bill that was going to give us a framework across the country. But the thing that has happened is that it was a private member-sponsored bill.
Oh, it was a private member-sponsored bill.
And the time has lapsed. So unless we get another sponsor, I think we will not be able.
But do you think it's a laudable one? I think we should get another sponsor to push it.
We should. Actually, yesterday we even visited the East African Community CAS, and we talked about it, and he said he's going to lobby and see who can advance that particular agenda.
Thank you.
Just before Mary leaves there.
Yeah, as we actually giving our closing statements, actually, maybe that will mark and address any issue that is, because I'm really strapped for time as well. Yeah, we can say something.
The question of unclaimed financial assets. It is an offense for any cooperative not to report unclaimed financial assets in their saccos to the Unclaimed Financial Assets Authority. Section 15 of that Act.
Yeah, because they're supposed to declare.
They're supposed to declare, actually. And therefore, it is, this should go to all the leaders of the cooperatives, that they must maintain records of unclaimed financial assets and report them to Unclaimed Financial Assets Authority.
Right, thank you.
Yes.
Let's give it to Opondo, also your closing statements. Mary, you don't have to leave because now we're actually closing. Okay. We'll close together. Opondo, briefly.
Yes, Mr. Debarl, what I would like to tell Kenyans is that we should all be encouraged to form more service cooperative societies. Insofar as membership is concerned of these cooperatives, integrity is really key, and turnaround management systems is really key, because we realize that in service cooperatives, unlike the financial and housing, the organization runs more on the single share capital, originally muted from the members, unlike the monthly contributions from the housing and the financials. Yes.
Thank you. Thank you very much. Let's hear from Samuel.
Two things are very critical. The politicization of cooperatives. If we are to move from the traditional way of making them political outfit in terms of the way they even elect their members and all that, and embrace corporate governance, that mutation is not clearly seen in terms of making people understand that the corporate governance aspect supersedes the political machinations that some members are able to get to those seats. Number two, the education of the public on the role of the saccos and the cooperatives, mainstream cooperatives and saccos as cooperatives. That education needs, and I want to draw that challenge again to my two principles. That education needs to be an ongoing concern.
All right, thank you. Maybe as we're running up, you need to address this briefly in your closing statement, because Obed Makori is saying, has the data center at Mwalimu Sacco been fully audited and authenticated, or it's in the learning phase? This is for you.
Thank you. I want to confirm that actually it has been audited, authenticated. We even have, Central Bank even came to visit and check it, because there are banks who we are also hosting that data center. The other thing I want to mention is that, SACCOs need to come together, or the corporate need to come together and share services so that we can improve on efficiency at a low cost. Because one of the challenge, of course, is the management of cost, in the cooperatives, which is making them not to employ, like where we are talking of robust systems, which, can help the SACCOs. And the final thing I want to mention about the issue of where we are talking of members passing on, and then their next of kin cannot access, their deposits. What is important is to ensure of every cooperative, as you recruit these people, in the form of recruitment, include also information where, as a member, you declare who is your next of kin. Then we address that problem.
Thank you. And finally, let's hear from James Mwaka, as we're winding up.
Thank you, Debarl. I think my parting shot is that cooperatives must only deal with their members, no non-members. Number two, members of cooperative societies should demand efficient and effective service from their cooperatives, and and total compliance with the law. And where they suspect and see there is non-compliance of any law, they should report to the regulator.
Thank you. Thank you very much. Finally, Mary, briefly, 30 seconds.
Yeah, the cooperative model can cut across all sectors of this economy. That model is a very sustainable model. That model is inclusive. So I would urge people, start a cooperative, but please be in charge of your cooperative.
Thank you. All right.